Good afternoon. Welcome to the TheoTrade afternoon video. I'm Blake Young. Today is December 11th, 2025, and we're going to talk about the response or reaction in rotation to the Fed's rate cut yesterday. So when we look at the market, we know they cut rates, and that was expected, but we also got a little bit of dovish conversations talking about their concerns, their worries, the things they're paying attention to. Now, I think they're just talking the game, but they're not necessarily looking to cut rates again, at least not in January, February, probably not even into March. And part of that is because we're still seeing inflation pressures. But what we are seeing today is we're still seeing rotation of money from key areas that have been the runners and into things that have been the dogs or have been the ones that have been selling off. So we're going to look at a couple of different areas in those key sectors and talk about what that means for us over the next couple of weeks, couple of months. And today we've continued to recover. So we were flat just a little while ago on the S&P 500. We were flat about an hour and a half ago, and we've recovered to try to retest yesterday's high. So gap down to start the day, traded back up. It's trying to retest the response reaction from the Fed yesterday, but it hasn't cleared it. We are not following through. This is a gap down recovery. But again, we have not cleared that high, and every single trading day except for one this month has been at what we call fair price. Now let's look at the QQQ, because we know that the market was lifted initially by the tech stocks and the AI specific stocks. S&P 500 has about 35%, 40% weighting in those, but the QQQ has even more. It has approximately 70% of the weighting is in tech heavy stocks. As you can see, we do not have the same recovery that we do in the S&P 500. The fact that the tech stocks are not retesting their high, they also gap down. They're also staying at near the 50% fair price for the month of December. This is showing us that we're not rushing back into tech. We're betting on safer plays. We're betting on what we think is going to be most impacted by the rate cuts, and not just about this idea of chasing hope. Now we're pushing up a little bit higher as we speak, but again, it's still a rotation situation. One of the top performing sectors today was basic materials. That is not what you say is a big bet on AI. And technology and Google down 2%, technology sector down about 0.5% so far, as well as communications from yesterday's close. So we're just kind of sitting here in the middle. So I don't want to be betting on technology. I want to be betting on those stocks like consumer staples and basic materials, and even back into utilities and healthcare, if we're going to be betting on a bullish side of the market, if this isn't just a temporary pop due to the Fed and then a sell-off. Now if we look at those sectors specifically, XLK will mirror pretty close to what we just saw in the Qs, and I'm looking to fade this back down into about 144. But let's take a look at that consumer staples, healthcare, and basic materials, who was the star of the day's movement. As you can see, consumer staples touched the oversold, bounced back up. Yesterday's response to the Fed cut was small, but we're above it. We've traded through it. We gapped above it. So instead of gapping down and trying to recover, like the S&P, gapping down and barely recovering, like the NASDAQ, this is a gap up, test the highs, and end up possibly up more than half of the candle body as well. So consumer staples looks promising to me at this moment. If you look at healthcare, and we'll zoom in on that, healthcare also gapped up after the Fed day and is giving us a buy signal as far as the monkey bars are concerned. So we've recovered off of those lows. This is a buy signal. I'd expect at least 155, probably up to about 160 in this move, and I'd start betting on healthcare for the next 2 or 3 weeks. Basic materials, the one that performed the best today. As you can see, huge reversal. Yesterday was your buy signal, and on the Fed day, and another gap up close higher. So we've cleared the recent highs. I would say you've just created a double bottom or a funny looking head and shoulders off the lows, and we could be looking at not just a move up of the monkey bars, but I'm looking for about a 9% climb from the 44.78 from that breakout, and I'm looking for it to duplicate about $3 to 48 and get all the way up probably to 48.20 in the next 2-3 weeks. Focusing a little closer on basic materials, you can see it's metals and mining. If we're cutting rates, we're creating inflation. If we're creating inflation, all the people that produce core goods, basic materials, that means their products are going to sell for more because that's what inflation is. It doesn't necessarily cost them the same incremental cost higher if it does go up. So meaning that it's going to cost them the same amount to get the ore and process the ore as it did before, with maybe tiny moves in the underlying cost of the production of their material, the cost of goods sold. These have all done really well today. Newmont, Freeport, Nucor, all doing well. And you can see the chemical companies. We have Mosaic, which is primarily agricultural, and CF Industrials. So chemicals and mining is doing very, very well. If you want to trade more broadly, you could just go with XME, Metals and Mining ETF. And this is a breakout today. Yesterday, or 2 days ago, was a breakout. Already ran the full distance, broke out again. I would be looking for a move at least up to 108.70, 109. And that may be the better bet, to bet on XME over the individuals, just because they feel like they've gone a little too far too fast. I need these to breathe out. But Freeport, as you can see, hasn't really given you any new buy signals except for yesterday, and it ran the entire distance of those monkey bars all the way to the top. If you look at Newmont and Nucor, very similar, NEM, and that we've already broke out and already gone to the first target. This still has some upside if we go up to 105, about 5% climb. And Nucor is just trying to see if it can break through the zero. If we fade and close the day below 166, I would definitely not take that trade bullish. But if we can maintain a close above this previous high, then I'd be willing to step into Nucor. It just might be an easier, manageable trade to go with XME and diversify across multiple metal and mining companies. Now, I know it'll seem like I'm beating the same drum. I've talked about these guys before. We've talked about Walmart and Dollar General and the discount retailers like Ross and TJX. But Walmart, even though yesterday was a sell signal, and I even commented that this is a good place to take profit, I can't buy into here, this is creating a potential reversal of the pullback and a breakout. Now, if we get through this high of 116, 116.27, I would be willing to buy in early on Walmart. I do think you're going to see Walmart hit 120, probably 123 before the end of the year. And that could be another $7 move. It's about 5%. Dollar General is similar in the fact that it's testing the recent highs, but you actually got a buy signal at 125. It's gone the same $7 up. I need it now to clear the high, and very specifically clear 135, but at least close above 133 for me to think that we're going to keep on going. But it's still a very strong stock. And even with the rate cuts, even with the concept that we are going to see more cheap money, we're still betting on the discount stores. And so I'm looking for new entries on Walmart and Dollar General. What I'm a little shocked with is the way that Visa has responded to the Fed rate cut. Visa is up 6% from yesterday's close and spiking higher, going through the roof, and I'm looking for an opportunity to fade this. Now, I thought I'd be able to fade it near 341, but as you can see, we're not done, and we're still trying to climb right now. So I'm going to look for a retest of 350, and here's the thing. Visa doesn't benefit directly from lower rates because they can get a bigger spread or bigger margin. They only benefit from more transactions and more fees. So the lower rates doesn't change much from the underlying business model of Visa. Not that I can see. Not like a bank or an American Express or other credit cards that are the underwriters, the banks behind the lending. Visa is not. They're the network. And so this reaction, this response to the rate cut with Visa, we didn't get it yesterday. Unless there's something that I'm missing in this move, and I may be, we didn't respond positively to the rate cut. We're reacting post hoc. So I'm going to look for Visa to test 350. And after testing 350, I will start looking for short call verticals and long out of the money put spreads to trade not just back down to 330, but potentially all the way down to 310 into next year. I still think this reaction response is excessive, and I will be looking to fade this, but fade it at the right level. Between 347 and 351 is where this resistance and selling pressure built up, and so I expect that to be defended again. Implied volatility is super low, and so with this bounce, this spike, I'll be looking for probably out of the money put spreads to be able to take advantage of a major move back down for very inexpensive. And I'll be watching for that over the next 2 days. That's going to do it for me today. Thank you for watching. I will see many of you in the morning, and we'll catch the rest of you next week.